Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. So, what is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of something called a line of credit. And it's something that I'd like to talk about as you're staring at this $14,000 check that I got as a landlord a while back. And they say, this is what they say, that the more you stare at this check, the more my ego grows, right? So stare at it, pause the video for like 10 seconds, and then we'll keep talking about velocity banking because that's what we talk about pretty much every single video. All right, let's just go get started. I'm too lazy to wait 10 seconds. So, what is velocity banking? Well, it's a possible way to escape the financial matrix because there's two levels to this money game. Number one is you got to make money, right? And a lot of people don't even make level one because a lot of people live paycheck to paycheck and they just don't make enough money. And then level two is you make money and then you're still broke because you have too much debt, right? And if you know anything about banking and debt, is banks don't lend money to people who need it, right? Um, See, their hope is like they want to spot people who make good money, and then you could kind of think of the bank as like a blood-sucking leech, right? Or a vampire. So they're gonna give you one debt after another, and then slowly over time, okay, slowly over time, you're gonna need money, and then that's when they're like, "Oh, we can't lend to this person. This person needs money," right? And that's the plight of a person who has debt, especially if they make good money. I've had people over the years randomly send me their spreadsheets, make 10 grand a month. Okay. They make 10 grand a month and, or even 20 grand, I think. And then they're still broke because they got too much debt. And here's the secret to all of this, right? Instead of saving money, you don't save money. Okay. So you have the same income and the same expenses and you don't save money, right? And this is shocking to a lot of people. This is how you escape, or one possible way to escape the matrix, right? Just don't save money. Like make more money and then don't say it. If you got debt to help you in your business, just don't save it, right? This is counterintuitive in the banking world, right? Like they'll offer you these things called lines of credit and then act like you can't use it. Like they act like a line of credit is like a one-way loan, and when it's not, okay? And yeah, so what do you do? What does this look like in real life when you don't save money? Well, it just kind of looks like this. It kind of looks like this, right? No, actually, it doesn't look like this. This is actually my mortgage I paid off in 2 years and 9 months. But yeah, I don't even know I mentioned it because I mention every single video. But you might be new to this channel. But I did pay off my mortgage in 2 years and 9 months. November 1st, 2021 is when I bought the home. July 29, 2024 is when I paid it off. But that's no big deal. Actually, it is. I asked ChatGPT like, what percentage of people does this put me in if I paid off my mortgage in 2 years and 9 months? It's like, oh, 1%. Top 1%. Okay. So, anyways, so let's go ahead and take a look at what velocity banking looks like in real life. Money comes in, you have no money saved, and it just goes out to your line of credit, right? And we're going to assume for the purpose of this demonstration that we have an access to $125,000 free and clear line of credit. Why free and clear? Because I'm lazy and you kind of have to think of your line of credit as like your safety line. Like it would save you if you need it, if you needed it, right? But unfortunately, here's the sad truth about when banks lend you loans, lines of credit, any sort of debt. And I just said this in the beginning of the video, banks don't lend money to people who need it, right? And people try to like argue with me on this, and it's like, okay, I'll just say you're right, but I'm a guy who's wrong, and I have over $604,000 in lines of credit. $604,000, right? Look at all this. Look at oh my goodness, all these lines of credit. This is my new $10,000 personal credit card, right? Personal credit card. And got that recently, and I'm using it 0% 12 months. And here's the secret: banks don't lend money to people who need it. Right. That's how I got all these lines of credit. And people do this wrong. Right. And actually, I didn't even explain what a line of credit is. So, what's a line of credit? All it is a financial tool where you can borrow money, pay it back, and then use it over and over again. That's a line of credit, right? So home equity line of credit. This is my $280,000 home equity line of credit. So it literally means I go to the bank's website, click a button. Okay, I click a button, and then yeah. I mean, they'll dump $280,000 into my checking account. Okay, and they'll charge me a 7.5% interest rate. 7.5% interest rate, not bad. right? And so, yeah. So here's the thing. Almost no one will give you a free and clear line of credit when you're broke, like I said, because banks don't lend money to people who need it. I can't say it enough because so many people do this wrong. See, when the bank looks at you and they see that you have $48 in savings, okay? $48 of savings. All right. They'll the way that they think of it is like a person who's gotten into a car crash without any car insurance, and then you're trying to apply for car insurance. There's a order of operations where you got to do things, right? You got to get the car insurance before you start to drive, right? Just like you got to get the line of credit before you need the money. And too many people, they're like, "Oh, I wanna get the money when I need it. I wanna get the car insurance after I've driven the car and crashed it and didn't have car insurance." That's essentially what you're telling the bank. And the reason that I teach this is, what if you did have it? What if you did have that lifesaver? You would never even be here, right? Remember that quote from Morpheus from The Matrix? He was like, Neo was like, "You mean I can dodge bullets?" And then Morpheus like, "No, when you know you won't have to," or something like that, right? Okay. But what we're gonna do is increase this cash flow number, right? And the way we do that is by moving some debt. And we have this number called the cash flow index. So think of this as a ranking system, and all it is statement balance divided by the monthly payment, right? And you'll generate this arbitrary number that's kind of like rank. So the lower the number, the better. So what we do is we take the balances of these debts, right? And I think how much was it? Let me actually calculate. It's 5, 8, 27, 37, 35. Okay. And then I'm going to sum it up, and that's $112,000 of credit card debt. So what if we moved $112,000 to a 8% home equity line of credit? Okay. And then guess what happens here? Oh my goodness, these all turn to 0, don't they? And we literally went from $48, 40 let me zoom in here. Whoa. You remember that line from Star Wars Episode 1, The Phantom Menace? Now this is pod racing. I don't even know why I said that, but it feels like that, right? Especially if you go from $48 to $0, and then you have $3,753 of cash flow. And then the final step is you put your entire paycheck into the line, 7,800, and you take your expenses out, and then you rinse and repeat over and over again. 7,800 here, 4,000 out, rinse and repeat over and over again, and then that's pretty much it. And then your debt will be reduced by your cash flow plus some interest, right? So let's go ahead and do this. This is month 0, right? And then this is going to be I2 plus 1. Okay, I2 plus 1. And then G2 plus H2 minus whatever our cash flow number is, right? It's 3753.60. 3753.6. Okay, and then what we're going to do is take the interest based on the average daily balance, multiply by the interest rate, which is 0.08, right? And then you divide by 12 because that's how they calculate the interest monthly. They quote it to you annually, and then you divide by 12 to get the monthly charge. Okay. And look how easy that is. You see how easy that is? I just do Control C, Control V. And then within 34 months, it's paid off. Whoa. That's how easy. Man, I could just do this in my sleep. I'm Neo in the Matrix, right? Like so many people are like, whoa, you're so fast. I was like, I know, right? All right, so 34 months, that's 112K of debt paid off in less than 3 years. And that's in some areas that's the amount of a mortgage. You know what I mean? All right, so now let's whoopsie, let me reset this. Tackle on our amortized debt, car loan, student loan. Student loan. What am I doing here? Student loan. And then student loan. And then we're at 34 months. So luckily with this loan calculator, I just got to put the current month. All right. And then we see what the current balance is. And then we use that cash flow index. Again, the lower the number, the better. So what does that mean? Basically, you pay off the loan, you get a lot of bang for your buck. I give you 13 grand, you give me $500 a month, my cash flow back, or I could give you 200,000 and I get $900 of cash flow back, right? Which one gives you more bang for your buck? That's essentially what that low cash flow index number means. Okay. All right. So let's go ahead and do this. And then I'm just going to move it right here, plus 13738.1. And then I'm going to do this right here. And what's our cash flow now? Right? Our cash flow, this is going to be 0, is going to be 4,306. Okay, so now let's go ahead and do that. Redo our cash flow, and then this is going to be minus 4306.1. And I'm going to do that there, and then 37 months. Whoa! Look at that. 1, 2, 3, 3 months we paid off that car. That was simple, right? So it's going to be 30, what was it, 37 months? 37 months. 37 months. And then I'm going to do, all right, 37, 112 plus 30, 112 plus 30, and there'll be 142K. And then we just have two more, student loan to mortgage, student loan to mortgage. So there's going to be 0, 37, 37. Let's pay off that student loan. All right. We got so much cash flow. It don't even matter if we're moving this. It kind of does, but not really. Moving this higher interest rate. Actually, did I screw up? Yeah, I screwed up. Whoopsie. I don't know. How did I screw up? All right. So there's going to be 0. Let me do this right here. $4,000 of cash flow per month. All right. And then this is going to be, how much should we move to the line of credit? This is 0, 37, 7, 33 grand. All right. So 33 grand, we move into the line of credit. So it's going to be plus 33211.06, and then our new cash flow is 4306. Oh, say no, my bad. Yeah, it's 4772. I got mixed up. All right, that's right. So let's do that. Okay, so now let's update our cash flow, 4772.47. And now I'm going to do that here. And then we see that in 44 months, our student debt is paid off. So 44 months. And then it's 142 plus 45. 187K. All right. So 220,000, 44 months. And then now we're going to chunk our debt. So what does that mean? Instead of moving this whole thing into a line of credit, here's why you shouldn't do that, especially if there's an interest rate difference. 3% loan, 8% line of credit. Now, what does this high cash flow index number mean? It just means that you get little bitty of cash flow compared to the loan amount. I mean, would you give someone $200,000 just to get $900 a month back? Right? That's what that means. And so if you have you're getting low cash flow and you're moving into a low interest rate loan to a high interest rate line of credit, you'll probably pay more than you have to. And luckily, I have this velocity banking calculator right here where everything's filled out. And look at this, 3.1 months or years paid off, 3.1 years, right? And then if I show you, if I move the whole loan into the line of credit, a little bit worse, right? No, I mean, we still have really good cash flow, but why pay 29 grand when you could just pay 10 or a little bit less? I don't know. All right, so 3.1 years. And if you want to know where I got this from, Renatus, I'm a reseller of online education. Click the Google form link below. Okay. And it's funny. Okay, I'm gonna tell you what's funny. I keep track of how many people have clicked the Google form link. So many people cannot submit it. They're too afraid. They're too afraid. They're like, oh, it's too expensive. And then you're probably right. In the sense that if you can't get over the emotional hurdle of being able to spend money and actually like spend some time and effort into investing in your education, you are going to have hurdles, right? You are right. I mean, when someone tells me like whatever I offer is a ripoff, I'll be like, you're totally right because that's how you perceive it. It is me, whatever, here's the thing. I already know that I offer a lot more than most people because I just do random spreadsheets over and over again, and I have people addicted to this channel. Like, you should see the watch time. It's insane just for doing spreadsheets. I even asked ChatGPT. I make like a couple $100 a month just doing spreadsheets. Is that really good? It's like, dude, you're killing it, right? Anyways, all right. So let me just go here and do 3.1 years. All right, so it's going to be 0.44 divided by 12 plus 3.1, and that's going to be 6.77 years. And we're debt free. Okay, debt free. Okay, so just to end this right here, and you notice that I'm just talking about 6.77 years. Look, listen, it's not even mortgage free. Okay, it's not even mortgage free. It's all of this debt free. Okay, you ever watch those velocity banking YouTube channels where it's like be mortgage free in 7 to 10 years? Like, okay, no, be completely debt free under 7, including your mortgage, right? And what are you doing? All right, so let me just see. What can I help with? What can I help with? That's a good question. All right, can you speak in the voice of Morpheus and talk about escaping the financial matrix? For context, I am doing I just say I just did a velocity banking presentation where we paid off. How much debt was that? Because 187 plus 220, 407K, 407K of debt in 6.7 years. 6.7 years for my YouTube audience. All right. All right. Let's go ahead and read that in the voice of Morpheus, okay? So let's go ahead and play that.
In the voice of Morpheus, steady and commanding, with the weight of truth behind every word. The Matrix is a system, Neo. That system is money, a web spun with compound interest, minimum payments, and financial servitude. A prison for your mind and your wallet. You were born into this world, programmed to believe that debt is normal, that 30 years of mortgage slavery, 20 years of student loans, and endless credit card payments are just part of life. But what if I told you there is another way? You have already begun to awaken. You've seen it. $407,000 of change shattered in 6.7 years. Not by luck, not by lottery, but by velocity banking, the red pill of personal finance. A strategy that reprograms the rules, that turns your income into a weapon, that uses the bank's own tools against them. These institutions are not your allies. They are the very gatekeepers that hold the keys to your financial cell. But the key has always been within you. Cash flow, leverage, discipline. These are your weapons. With every dollar you redirect, with every interest payment you destroy, you take back control. You bend the rules. You write your own code. Now you must understand this. Many are still asleep. They cling to minimum payments like a lifeline, unaware it's a leash. They believe freedom comes at 65, if ever. But freedom, real freedom, begins the moment you reject the lie. You are not just escaping debt. You are leading a rebellion. Show them. Teach them. Be their Morpheus. Because some truths can't be told. They must be experienced. Would you like help crafting this into a cinematic script or something tailored for your next YouTube video?
Be their Morpheus. That's a good one. Be their Morpheus. So here's the thing. I actually always have, well, not always. Most of the time tell you put a comment in the comment box below so I know you reached the end of the video. Here's the one for today, okay? I am Neo. Let's do that. I want to say be there in Morpheus, but something about that is like kind of weird to me. I don't know why. But let's just say this. Just if you watch to the end of this video, just type in I am Neo. Okay, I am Neo. Right? Maybe one day you might pay off your mortgage in 2 years and 9 months. Okay. 2 years and 9 months. That's what I did. All right. Well, that's it for today, folks. This is Karina Lanta Mentorship. So, just by doing this one simple trick, clickbait, you can pay off your debt, which is throw all your money into it. Okay. I know. You have all this cash flow, 5,700. And then now that's when you save money when all your debt is paid off, right? That's when you can save money. And then you're going to have something called rich people problems where it's like, oh my goodness, I got too much money saved. I got to make it work, right? It's how all the institutional investors think. They got too much money, so they got to put it to work. All right. Well, that's it, folks. This is Korean Lanta Mentorship. Have a great day, and I'll see you all in the next video.